Hello, and welcome back to another episode of Good Investing. It's so great to see you, Andrea.
I'm so excited to be back with you.
Should we introduce ourselves?
You are Rachel Grun.
And you are Andrea Swick. If you don't know that by now, then you definitely should. You've seen our faces a few times. We are so excited about our guest today, guys.
So excited. So they are like royalty, but like super just amazing, humble people. I'm so honored that they're part of our podcast today.
What did you call them?
Royalty.
Royalty, the
Yes.
ATM king and queen.
Yes.
I've heard them described as such. I'm so excited to pick their brains and learn about all the fun and exciting things that they're doing in the investing space.
So impressive. So we have Samantha and Michael Guthrie. They started an ATM company 27 years ago on a credit card and $2,000. Now they run almost 9,000 ATMs nationwide. They also learned about multifamily tax benefits as a hedge against inflation and diversification outside the stock market and took major action to invest there.
Wow, that is incredible. I cannot wait to learn more about their story. Welcome, Samantha and Michael. Thanks for coming on.
Thank you.
Thank you for having us.
The pleasure is all
Howdy,
ours.
everybody.
So why don't you go ahead and kind of give us, tell us where you're from, your kids, your family. Give us kind of a base understanding of who you are.
Wow. Okay. So I grew up in the San Francisco Bay Area. I actually started in real estate when I was in college. But Mike and I met, I guess I was late 20s, early 30s, and he was actually mostly grew up in Spokane, Washington. And his daughter is 31 now, getting married in just a few weeks. So we pretty much, so my previous background was sort of this real estate, mortgages kind of a background. And then I got into some marketing, and Mike's background was actually in the military.
Yeah, I graduated high school in 1986 in Spokane, Washington, joined the military to get my X-ray certificate. Got out of the military, I think 94, and we met in the Bay Area around 97.
We got married.
We got married in 97.
We met in 94.
Didn't meet on your wedding day, right?
And,
a little bit before.
Right, just slightly before.
Couple days before.
Well, it's worked out.
It's worked out so far. And I used to do X-ray and MRI for a couple of trauma centers up in the Bay Area of California. And a friend of ours got us introduced to the ATM business because we were both working 9 to 5, 6 days a week, and we were looking for something more.
Yeah. That's how that ATM.
Awesome. So tell us about your ATM business.
Yeah. So you said that you started this business 27 years ago. If I'm doing my math right, that's before YouTube. That's before podcasts. How the heck do you find out about ATM investing 27 years ago?
Yeah, we used our
smoke signals.
No joke.
If you know what a beeper is.
Well, so it was actually a new industry. It started in April 96. It was a brand new industry. A friend of ours was doing that in another state, and we tried to sell ATM machines to bars and restaurants in the San Francisco Bay Area, but at the time they were like $12,000 a piece. And nobody wanted to say yes. And after several months of attempting what seemed like a great idea from just a business perspective, we were like, well, what if we bought one and we put it in your nightclub and we did the cash and you just get a little part of the revenue? And they were like, great, do it. And so our very first machine we bought on a credit card, and we drained our bank account of all like $2,000 we had to our names at that time. So, I mean, the lesson there is sometimes you just need to take a good risk on yourself and know that, you will figure things out. So it started there. And then within a month, we had 4 of the mega nightclubs in San Francisco. And so it ended up being this completely like residual income, part-time, great gig. So back in the day, people would call themselves dinks, double income, no kids. And we were like, we're like a trink, triple income, no kids, because the ATMs were making that much money. And, at the time it was probably like $2,500 a month as a side hustle, but it was only taking a couple hours a week to do it. So it ended up, kind of catapulting us into that industry more than we would have thought.
No kidding.
So
So
exciting.
you have since scaled to now almost 9,000 ATMs across the country, or just
Yeah,
in the
that's
Bay
what
Area?
Yeah.
all over the United States. We started placing them, and then other people wanted to buy through us, and we started to grow that side of the business, and so we became like a master wholesaler across the U.S. So we aggregate transactions across probably about 100 different smaller ATM companies to operate through us, and we run a little over 2.5 million transactions a month, and we have 4 people in our office. 2 of us are right here today. One of them's in Arizona, and the other one's in the Philippines. So this thing's our company's name is Automated ATM Solutions, and a lot of people in our business call us the Automated Kings and Queens because nobody our size runs it on that few of people in the office.
Wow.
Yeah, that's incredible. I have a quick question. How do you, maybe this sounds like a silly question, but I just want to make sure that, our listeners' questions are answered since they're
Yeah.
not here to ask them. How do you make money on ATMs? Are you making money off of that transaction fee? And are you splitting it with the vendor that's hosting your ATM?
Yes, we make money off of the surcharge that is charged to the client when they swipe their card, and then there's also revenue that the bank pays us on the back end of every transaction for taking care of their client.
Got it.
And we do split off a portion of that to the ATM owner keeps a majority of that transaction fee, and then they sometimes share a portion of that with the merchant or wherever the ATM is being housed in whatever business.
Yeah, there's basically a way to take that revenue and split it however somebody wants it split up. So we keep a certain portion just to drive the transactions, and then we really help our ATM clients source the best products and services at a discounted rate because we use our leverage to their benefit to get them great deals, which is actually really what we ended up doing in multifamily as well.
Yeah. So
So
tell us about all the assets you're currently invested in and which one's your favorite.
Well, the stock market isn't my favorite.
Bitcoin.
And thank God, as of today, I don't own any Bitcoin. In February, it was $45,000 a coin, and I was at a financial meeting at Tony Robbins, and they said it was going to go to 20 grand before the end of the year, and we're in June, and it's not the end of the year, and it's at $21,000 today. So Bitcoin has gone down, and our favorite asset truly is the multifamily. And last year we actually got a $125,000 tax refund because of owning 3 assets the year before in multifamily and using the K1 depreciation and bonus depreciation in year 1 to actually offset our regular income.
Yeah, and I just want to say the evolution of how we even got to
Please, yes.
multifamily was we actually had purchased some homes as rentals. Like we were, taught go to school, get a good job, buy a house, try to invest. That was pay those off. So we were not even using leverage to our advantage, but we would talk with friends and we'd be like, "Oh, what about this multifamily thing? Have you heard about that?" We just didn't know anyone who did it, and for like 2 or 3 years, we were like, I don't even know how to get in. I don't know anyone who does that. I don't want to just like send my money to the Ethernet somewhere and wonder what happened to it. It just seemed too far away. And when we learned more about the benefit, like I just thought it was another investment vehicle. I didn't realize it had tax benefits, that you actually make money along the way, that you're actually an owner of the property and you get some of the appreciation. Like I just didn't even know that. I just thought it was sort of more like a passive investment, almost like a stock, like a REIT. I was looking at it more that way, and it wasn't until we got more education on it, really through Brad Sumrock out of Dallas. But that's how we were like, our eyes were completely opened to the additional advantages, and that it really shifted everything. We completely invest differently today than we would have just 3 years ago.
That was my next question. When did you kind of find out about multifamily investing? Or guys, when did you find out about it and when did you first take that first leap into it?
September 19, Samantha was watching an AIMNAC con, and I happened to actually be working on our warehouse, and I came home, and Grant Cardone actually was on Brad Sumrock's AIMNAC con seminar online, and Samantha's feverishly taking notes, and she's like, "We got this. We got to figure this out." So I logged in on my computer in my office. I met a couple people along the way, and literally within 2 months of that seminar, we were in our first deal, and before the end of 2019, we were into 3 deals, and those are the 3 deals that actually got us K1s to get that tax refund I was speaking of earlier.
And those were just as limited partners.
And those were just as limited partners.
Wow. Amazing. So have you had any deals go full cycle yet in the multifamily space?
One.
No
Wow,
kidding.
already.
One of the first 3 that it actually sold in January of this year. We had a $50,000 investment. They paid us $675 quarterly for the first 14 months that they owned it, and then they cashed it out, and we got a check on our $50,000 for $75,000
Awesome.
on top of it.
We made like 80 something.
So we made a little over 80,000, or we made over $35,000 on a $50,000 investment inside of 14 months.
Wow.
Amazing.
And was it kind of the same with multifamily, where I know whenever you started the ATM business, you said, listen, we're going to go all in. We're going to take out credit cards. We're going to go into debt to make this happen. With multifamily, was it that same kind of tenacity that you entered into it with? Or was it more of like, let's test the waters and see how this performs before really committing?
Well, for me, okay, so here I was at AIMNatCon taking notes. It was virtual at the time, so I wasn't, on site. But I was like, of all the investments we've ever looked at, it just had so many like check marks on advantages. And so we kind of did go all in. It really wasn't until we got our education and got into the ecosystem through our mastermind that it really allowed us to feel more comfortable, like really going for it. But once we realized, when you look at people like the wealthiest Americans got it through real estate, like instead of me trying to figure out what's the best way or the best thing to do with my money, why don't I just look at the people that are successful and follow what they did? And so, you can, analyze till you're paralyzed.
Yeah.
Or you can kind of just go for it. And this was kind of a go for it moment. And really, I feel blessed that we got into it when we did because of inflation.
Oh my gosh.
Yeah.
And all of our money and this is what happened as COVID hit. Our ATMs weren't running as much. We were down maybe 40% in volume. And of course, our stocks tanked. And I knew they'd come back. That's like how that works. But I was like, what if they don't? And I was like, I thought we were diversified. And we were, but it was diversified in the market. And I was like, we need something that doesn't operate the same way the stock market does. And it really did shift a lot. And we weren't shy about pulling money out of the market to go into multifamily. In fact, we sold all of our rental homes. We had 6, I guess, that we sold. And put that into multifamily.
So you're really talking about like a shift in mindset. You were thinking a certain way and then you had to change your line of thinking. So how did your mindset play into your success?
So that's a great question. We learned a lot about mindset late 19 from Tony Robbins when we joined the Platinum Partnership there. And one of the number one there's 2 things that they really say is success leaves clues. So follow people that are successful. So it shortens your learning curve, and proximity is power. So get close to the people that are doing the deals. So you have a better insight of what's actually happening and you have a better understanding of what's going on. So then you know the players of where you're parking your capital. So you can pick up the phone and actually have a phone call with somebody if you have a concern as to how the deal's going or what your money's actually doing. So the mindset has had everything to do with it. And when we made up our mind, we went all in, like Samantha was just saying. We sell 3 things. We sell modems, we sell ATMs, and we sell apartment complexes. And that's all we do.
Which is that's a lot. That's like 3 different businesses. And I know from the multifamily side, like that's a lot in itself. So how do you manage all 3 businesses at the same time?
And having a family.
Yeah.
Right.
And traveling the world.
Yeah.
Well, then there's that.
Yeah. And do you have time to play?
Which is like crazy that we do. So I think we spent, constant never ending improvement. So, sometimes I look at things that we do on a daily basis and I'm like, what a pain. Like, oh, this is just like, it takes too much time or it's hard to do. I'm like, isn't there a better way to do it? Or isn't there someone else who knows more about this? And we've like used every effort to try to figure out the best way to get things done, which has freed up some time. So we found good people to help us. We found, techniques to sort of shorten the learning curve. We don't try to recreate the wheel and start all over from ourselves. We're like, what works? Go to professionals, ask them what works, replicate what they do. Don't, I think we just started, the ATM industry didn't even have mentors. It wasn't even an industry. There was no one to talk to. And so it hadn't even occurred to us. I know that sounds silly, but it didn't even occur to us like to have a mentor for anything because we'd just always done really ATMs. Right. And this happened. I'm like, it's a profession. People do it. There's lots of people to talk to. And so we actually say no to some things because it would take too much time. Like even in the ATM industry, people would be like, oh, do credit card transactions. And there are other things that we could have gotten into. We call it like chasing shiny objects, right? It's like, you see a shiny object and you want it. And it's like, yeah, but that's not really going to keep us on the goal that we want. And part of that goal is having a quality life.
Yeah.
Well, I was going to say Brandon Turner, if you're familiar with him from Bigger Pockets, he had this analogy, which I loved. And he's like, imagine that you're on this island and you're trying to build a bridge to another island and you keep starting to build these little bridges, but then you stop and you get distracted and you build another little bridge. And you've never end up building a bridge to the other island because you keep getting distracted and building these tiny little ones instead of really focusing on those things that you're passionate about, you're good at, and are the best income generators for you.
Yeah. I mean, even in multifamily, as opposed to us, and this is maybe where we're a little different, I don't know, as opposed to us like having our own team and sourcing all of our own deals and underwriting everything and then doing asset management and the money raising, we knew we were new to the industry and we thought maybe we could raise money, right? So that if I'm not going to say I know how to asset manage if I don't know how, I'm not going to say I know how to underwrite if I don't know how. So our first attempt to get into the industry was like, well, maybe we can raise some money. I don't know. That just seemed like a better talent pool. And so we were asked to raise money on a deal. And the first deal that we were general partners on, we raised $5 million in 3 days.
Wow.
Just through friends and family. And we were like, whoa, we are on to like, there are people, they want it the way we want it. Like we couldn't figure out how to get in. They couldn't figure out how to get in. Why not? So offer that.
So you guys started out passively, correct, in the multifamily space and then moved over to the active GP side?
That is correct. We have about 16 deals that we are limited partners on currently.
Wow.
And just finished our sixth GP.
Our sixth GP raise.
In a year.
Wow.
And we closed our first deal in July 20th of last year.
Wow. So quickly for our listeners, LP is going to be the limited partnership. That's the passive investors. They do not run the deal. They hold no liability based on how the deal performs. And they are truly passive. And then the GP is the general partnership side. They're the deal operators and they are materially participated in the deal in some capacity, whether it's through capital raise, asset management, or acquisition.
I'm going to also be designing one of our deals. So, or you could be a designer.
Love that. Yes. There's so many different ways to get involved in the
like
GP
interior
side.
design.
Yeah. Doing all the CapEx design.
Mm-hmm. Yeah.
That is so cool.
Congrats.
Yeah. Wow. That's awesome.
One other thing is a general partner, you actually are responsible for the loan you're signing on the loan documents for these 15, 20, $50 million assets, depending on where and what you're buying.
Right. And I know the answer to this, but I'll ask you guys. So do you have to be a general partner in order to get that tax benefit from the depreciation?
You do not.
Tell me more. So I don't have to be active.
Right. That was our main reason for wanting this as an investment. We actually had a huge tax liability from the ATM company. And I kept going to, this is such a good story. We kept going to our CPA at the time and saying, what else can we do to lower our taxes? I mean, it's well into the 6 figures. It was just like painful to write that check. It's like, what else can we do? He's like, you've done everything. And a few years go by, we end up working with a different CPA firm. and ultimately get into the multifamily space. And I sent our original CPA our first deal. And I was like, hey, by the way, this is what we're doing now. And he writes me an email back that says, yeah, this has gotten a lot of traction over the past 10 years. I hear it's like a great thing to do. And I'm like, why didn't you ever say
what?
anything?
Yeah.
And this is just a word to the wise, like, just because someone's a CPA, like they don't necessarily know multifamily or how that depreciation works. And a lot of times people will go to their CPA and say, hey, what do you think? And because they don't know, they're giving you their best advice they've got. But because they don't know, they often will overlook the advantage of this. So
Yeah.
that's just a word to the wise that's how we got trapped too.
And just as Samantha mentioned, even if they do know,
I guess he did.
It's gotten traction over the last 10
Right.
years. And he knew, but he didn't share, doesn't always mean they're your best advocate, even though you're paying them lots of money to try and save you lots of money on your taxes.
Yeah, and from our investors, I also hear financial advisors.
I was about to say financial advisors, very similar.
So do you have experience with financial advisors, and kind of what did they tell you?
So we actually pulled money out from some financial advisors, and they highly recommended against it. And I think the only reason they recommend against it is because once the money's been pulled from their stewardship, if you will, they no longer make money off of that money. And when they're charging you a point per quarter or a point average per year on your money that's sitting in there underneath their management, they no longer make money. So of course they're not going to be as happy that you're investing in other things. But my thought is, why not share with your clients, here's another investment opportunity, and do the best thing for the client instead of the best thing for you.
Right.
Exactly. And we will tell the same things to our investors. Sometimes investors are not ready to invest in multifamily for one reason or another. And we tell them that because we don't want anyone to be in a bind. But to your point, Michael, financial advisors only make money on what assets they have under management.
Exactly.
So of course they're going to advise against it. And to your point, Samantha, I think being diversified in the stock portfolio is an oxymoron. I think it's nearly impossible. So yeah, I talked to one of my friends who is interested in passively investing in a multifamily syndication, but she said that her financial advisor advised against it because actually if she pulled her money out of the stock market, she would be losing money right now because it's down below what she originally put in.
Yeah, it's crazy.
It's really scary stuff. Yeah, I'm an adrenaline junkie, but not when it comes to my money.
Yeah.
Well, and like even right now, like I don't know what our stocks are, making lately, but what 6-7% on things that are sitting in the stock market, and inflation's higher than that. So really, I'm losing money every time it sits there. It's a cycle. It'll change. It doesn't mean I want to pull everything out of the stock market, but we probably pulled out 70% easily.
Yeah.
Maybe more.
We
But yeah.
did that as well. So y'all are already super successful. You were successful in your ATM business. You were looking for the tax benefits. You're now super successful in ATMs. What keeps pushing you to do more?
Yeah, we were actually kind of talking about that. Truthfully, I've gotten to a point in my life where I want to have the time and capacity to give back and to enjoy. Like we spent the first 3 years of our ATM company, we didn't have a single day off. And I keep saying, hey, I want my time back, but now I want to do valuable things with my time, right?
Yeah.
Like probably before I wanted a vacation. Now I'd like to give back and volunteer, be part of an organization that's growth and giving back. And if you're too busy, you just don't have time to do that. So that's one of the things I'm really trying to actively add into my life right now. By having companies that are run well and that I can oversee on a more management style, so that I can actually do valuable things with my life that feed my heart.
Yeah, I love that.
So making time for what's important.
Yeah,
absolutely.
Yeah, that's great.
I mean, work only gets you so far. It's not.
Yeah.
Work is it's meaningful and it's needed, but it's not very heart driven. And over time, you end up feeling kind of just overwhelmed. And too much work is not good for anybody.
Right. Yeah. So how do you take care of your mental health and physical health?
Ooh, we were just at the gym this morning.
We can tell, yes.
Because it all plays in together, you know?
Yes, and as you might know, we are doing a 21-day, 22-day
22-day.
keto challenge right now that just started. Um, I started meditating, reading more, trying to keep space open for creativity. What I find, if you're too busy, you can't be creative. Like
Yeah.
that's just the net. So the things that make people different or make you inspired are those things that lead to your own personal creativity. And I never thought to have time for that. And so I try to make time for that now. And then certainly eating well and working out. We really didn't start it till January of this year when we were challenged to do 75 hard. We'd kind of dabbled in health before. We'd eat well, but then we wouldn't work out. And it wasn't like all at the same time. And I really wanted this year to be my year of health. I want next New Year's Eve to roll around where it wasn't the thing on my resolution list one more time.
Wow.
I was like, what if it just wasn't on the list anymore? What if I just had that? And so that's actually been my driving force to keep doing different things throughout the year health-wise. And it's amazing how much that pays dividends into everything else.
Isn't
Yeah,
she
it was
so
so funny.
amazing?
Yeah, you guys are literally the goals.
Yeah.
Yeah, it was so funny. We were sitting in a hot tub the day after New Year's, and we got challenged to do this 75 hard. And we all were like, oh, we have a mastermind in a week. We have this ski trip. We have this. We have that. We're going to start in March. No. I don't have 75 days from March going forward to take off because I have trips and all these other things planned. So there's never a great time to start. Yesterday was always the best day to start.
Mm-hmm.
And we finally figured that out. And after doing 2 workouts a day for 75 days, doing 1 workout a day is not a big deal. We pretty much followed a keto diet during the 75 hard for the most part. And now we're doing a keto challenge again, but we're doing it fairly strict and by the rules. And we have a great mentor in Dr. Guillermo that's going to push us along that path.
Yeah, JJ and I are also doing that. Remember, I told you this
Yeah.
morning, Rachel. And we are following a very strict meal plan. And I actually went to a hip hop class yesterday, which was really
Wow.
fun. So yeah,
That sounds like fun.
I am
Yeah,
so
yeah.
impressed by you guys. That's amazing.
22 days of, and then we just want to keep it going. So
Yeah, I have a 5-month-old at home, so I'm using that as an excuse to not work out. And I just
Whatever you need, Rachel.
Yeah, exactly. I'm just trying to hunker down and get through this time right now.
That's right. Wow.
But I'm very inspired by you guys. That is awesome. It sounds like you're mentally, physically, and financially fit.
Yeah, exactly. Is there any other gems that you want to drop on our audience before we talk about how do people get in touch with you?
I say when you figure out what you want to do, stay laser focused on that. There's going to be so many distractions coming your way. There's just no other thing better than focusing and just moving the needle forward on what you're trying to do.
Yeah, I guess I would add to that don't forget your heart. Like let that listen to yourself, take the time to listen to what's really important to you, or you'll end up off track. Right. So you have to be the one that keeps pulling things back to where you want them to be. And that doesn't have to look like anything you've ever been told or anything anybody else thinks you should do, or even what you think they think you should do. Right. What's the best thing for you, and go do that.
Amazing.
Yeah, I love that.
And then how do people get in touch with you?
Yep. Oh, Samantha at cypressadvantage.com. So our ATM company is cypressadvantage.com, CYPRESS advantage.com. So that's the best way. Or Mike at cypressadvantage.com.
Or Michael at cypressadvantage.com.
We had to do both,
People just get Mike and Michael confused. So we did both and alias the other. So
yeah,
it would get to us.
That's pretty.
And I also want to plug y'all's ebook, right? 10 tips for investing in multifamily.
That's more of a handout. Yep.
A handout. Yep. Great.
Mm-hmm.
And our listeners can find that at www.cypressadvantageproperties.com, right?
Correct. Exactly.
And can you just quickly talk about the numerous charities that you're involved with, including Christ Kitchen, Cabo Church, Boys and Girls Club?
Yeah, sure. Well, so, gosh, just to back up real quick. Years ago, we were on a tour in Spokane, Washington, of a place called Christ Kitchen, and they actually put together like soup mixes, dry soup mix, and they sell them mostly in the winter time. But what they do is they get people in poverty, or not homeless, but people that are at the risk of being homeless. They have them come in and put those soup mixes together. And while they're there, they minister to those people. And we actually had gone on a tour of their facility. We were having lunch at their lunchroom when we got a deal that doubled our ATM company. And we both, still to this day, we just knew it was his money, right? We knew that God placed that in our lives so that we could bless other people. And so that's just continued to drive us. Like, if you're not giving back and you're just taking it for you, it just doesn't work the same way, right? You're just sort of, and I like money. I like to make money, and we like to work really hard, but there's something about giving back that gives back to you. The universe is always at work. And so that's Christ Kitchen. Cabo Church, we love to go to Cabo, and there's a great church there. The minister there actually says that, he's got people on vacation that stumble in and find God, and like, why not do that on vacation? That's a great thing. And then of course there are other organizations like Boys and Girls Club, and several more, but those are sort of our top that we like to give to try to give back.
That is awesome. You guys are
Love
seriously
that.
so inspiring. Like,
Yes.
I'm leaving this like absolutely totally jazzed for the week ahead.
Yeah.
You guys are great. So thank you for coming on.
Thank
We
you
so
so
appreciate
much.
you. And guys listening, feel free to reach out to them, head over to their website, or reach out to them at the emails provided if you would like to get in touch. Andrea, that is another fantastic episode in the books. Wow. This might be my favorite so far.
It really
Don't tell
is.
my mom.
Your mom was really good too, though. Okay, so let's not forget about our ebook and tagline.
Yep. And guys, if you're in the DFW area, we have a meetup group now.
Yes, I'm so excited to meet everybody. So
it's called the Passive Investors Network, or PIN. It's hosted by us at Good Investing in DFW. We're hoping to meet quarterly. I'm going to go ahead and link that meetup group in our show notes so that you can find it. And head over to our website, goodinvesting.com, for our ebook titled
4 Steps to Financial Freedom.
She got it. Finally, she got it. She got the title, 4 Steps to Financial Freedom.
Yes.
And as always, you can get in touch with Andrea and I. We're going to put our emails also in the show notes, along with Mike and Samantha's info too. Well, Andrea,
don't invest good.
Invest twice as good. Bye.
Bye.